Hey everybody, this is Alan Moore, certified financial planner and founder of Serenity Financial Consulting. Thanks for joining me. So December 31st came and went, and now it's time to file your 2012 taxes. You may have plugged your numbers into TurboTax or talked to an H&R Block person or CPA and not really liked what you found. So the question always comes up about this time of the year, is there anything I can do to lower my 2012 tax liability? Yes, there is. You can still make IRA contributions for 2012. See, traditional and Roth IRA contributions can be made for the previous tax year all the way up through the filing date of that year. So what that means is you can make a 2012 contribution all the way up until April 15th of 2013. So like I said, you can either do a traditional IRA or Roth IRA. You can do $5,000 into either one of those or $6,000 if you're over 50. But which one should you contribute to? Well, if you want a tax deduction, you want to lower your tax liability, get a bigger refund this year, then you would want to contribute to a traditional IRA because that's going to give you a tax deduction for 2012. But if you're getting a big refund or you're in a really low tax bracket, then you may want to consider using a Roth IRA because that money, although not tax deductible, will come out tax-free later on in retirement. It may be a better deal for you. But are there any income limitations? And yes, there are. High income earners typically can't contribute to a traditional IRA or a Roth IRA, but they're kind of complicated for the traditional IRA. So you want to do a quick lookup to be sure you know what your AGI is, your adjusted gross income, and compare that to the income charts. Because if you have a retirement plan at work, such as a 401k, 403b, 457, then you have pretty low income constraints. So if you're single, it's got to be under, let's see, 58,000. If you're married filing jointly, it's got to be under 92,000. Okay, so those are not very high thresholds. If you're married filing separately, you got to have AGI under $10,000. The IRS is not a big fan of married filing separately. But if neither you nor your spouse has a retirement plan at work, so you don't have access to a 401k through your work and neither does your spouse, there are no income limitations. So you can contribute the full $5,000 or $6,000 if you're over 50 into an IRA for 2012. If your spouse has a 401k and you don't, then you can actually contribute as long as your AGI is below, let's see, 173,000. So that's a pretty good deal. Now you'll be able to contribute, but your spouse won't because they'll have the 401k, so they're going to have different income limitations than you will. So it's kind of tricky. So you may want to consult with your CPA or just take a look online to be sure that you know what's going on. So a quick client case study. I have a client that's going to do married filing jointly. Their AGI is around 150,000. The husband has a 401k through their employer that they're maxing out, but the wife is a stay-at-home mom. So she really doesn't have any earned income and definitely doesn't have access to a retirement plan. So she can actually contribute, since she's over 50, $6,000 into a traditional IRA, and in return she's going to get back over $1,600 in tax refund because of the tax deduction. Now the husband can't contribute because he has the 401k, but she can because they're kind of in this in between with the taxes. So she's going to contribute the $6,000 and get back basically 25% of her money right off the top. So there's also a bonus tax credit that I want you to know about. If you're in a low income tax bracket, then you may be eligible for the retirement savers tax credit. Now the income limitations are pretty low, but it is basically a tax credit for saving for retirement. And you can get back anywhere from 10% to 50% of your contribution into a retirement account back as a tax credit. So let's say you contribute $5,000 into a traditional IRA, you're going to get the tax deduction, basically just through it being a traditional IRA, but you'll also be eligible for anywhere from $500 to $2,500 tax credit in addition to that tax deduction. So just Google retirement savers tax credit, or if you visit my blog, I have a link in there about where you can get additional information about that tax credit. So have you already made your 2012 IRA contributions? Are you thinking that maybe you'll make it now and maybe try and get that tax deduction? I'd love to hear your comments, and if you have any questions, feel free to ask them in the comment section. So that's all I have for today. Thanks so much for joining me.